Welcome back. As you guys know, the market is closed today, and most investors here in the U.S. are taking the day off, probably not even looking at our portfolios, because we are getting ready to celebrate a well-deserved long holiday weekend to celebrate this country's 250th birthday. But here's the reality, guys. The global semiconductor market, it never truly stops, because while our markets may be closed for the 4th of July holiday, we are seeing significant action happen across the Pacific in the Korean and the Japanese market that could give us a signal of what may happen when the opening bell rings for Monday, what we could see with our memory players. Because if we're just looking at the US tape in isolation, it is a trap. The global memory market, it operates in a tight interconnected trio between Micron, SK Hynix, and Samsung, as well as the elite hardware players in Japan. And because the time difference in the US Because there is a time difference in the U.S. and with the holiday, the Asian market was trading all by itself. It was trading out in the open on Friday while Wall Street was fast asleep. And what happened in Seoul and in Tokyo didn't just challenge the bear narrative. It gave us a complete mechanical blueprint of what is actually happening behind the scenes. So let's review the tape together. Let's take a look at all the signals that came out of the Asian markets, and let's see what it potentially could tell us about what we may see when the opening bell rings on Monday with our U.S. memory players here, the Fab Four, the memory titans that we track on this channel. So before we get into it, though, if you haven't hit liked or subscribed to the channel yet, do it now, guys. We're continuing to grow. Let's see if we can get this community up over 34,000 viewers with this video alone. Let's make this a celebration, just like we're going to celebrate this weekend when we're come together to celebrate this country's birthday. So let's jump in. To understand the explosive nature of what we saw in the Asian markets on Friday, we have to do an audit from Thursday first, because what we witnessed, frankly, at the end of last week was a cross-border risk contagion. The dominoes didn't start to fall in New York. They started in Tokyo and in Seoul. And let me show you exactly what I'm talking about. If I go back to Thursday and we take a look at the Nikkei 225, you can see it plunged. And let me pull it down to exactly show you. It says the Nikkei 225 suffered a sharp reversal on the Tokyo stock market on July 2nd, carrying over the momentum from the previous day's U.S. market, which would be Wednesday for us, where artificial intelligence and semiconductor-related names plunged. So that was the setup that we first saw on Thursday overall. The Japanese equities, they forced a brutal liquidation wave as a sudden massive 1% surge in the Japanese yen, driven by fear that local authorities were prepping an aggressive currency intervention. It slammed Japan's premium tech exporters, and the macro shockwave immediately spilled over into South Korea. Let me pull over. We can see what happened there with the KOSPI. You can see here, Japan and South Korea stock markets declined on July 2nd, with the KOSPI dropping more than 7%, guys. That is what we saw. All of that was brewing before we even opened the market in the U.S. on Thursday. We saw the South Korean market when it opened. Algorithmic desks reacted to the heavy currency jitter with extreme velocity. What they saw coming over from Japan, they reacted immediately with their algorithmic selling. The automated selling, it slammed the tape so severely that it triggered an emergency sell-side circuit breaker in South Korea, completely halting trade for 15 minutes as SK Hynix cascaded almost 15% down. Samsung dropped 9% down as well. That forced liquidation flush, it sent shockwaves across the Pacific right into New York at the opening bell, causing an aggressive downward laddering on the Micron 5-minute chart. Let me show you what that looked like. And as I mentioned, this is where Micron closed right here on Wednesday. You can see we did have that immediate gap up, but take a look at that laddering down that you see on your screen right here, and then further laddering down. That is the selling pressure that we faced with Micron throughout the Thursday session, and not just Micron. Let me pull over here. It was across the board. If you take a look at the watch lists that I have on the right side here, you'll see it's not isolated to the memory providers alone. If we just scroll down, you'll see the picks and shovels were down. We have KLA down. Intel was down. You know, it was also the optical players. You saw Oracle continue to struggle. We see Broadcom was down. If I scroll down further, here's Micron. Of course, it was down. We talked about that. SanDisk, Western Digital. But look at Coherent. Coherent was down by 9.5%. We see Applied Optoelectronics down by 13%. Lumentum down by 9%. AMD down by 5%. My point is that this was not isolated to the memory sector. This was across the entire board. All of a tech sector, the entire sector took a massive haircut on Thursday overall. But I want to jump back because I want you to notice the last 5 minutes, these last, not even 5, probably the last 30 minutes of trading here that we saw with Micron. I'm circling it on the board overall because that right there, to me, it symbolizes something. It shows us that there was this massive institutional block that surged, that stepped in to stabilize Micron right at that 975 limit, right about 976 a share. The whales were stepping in to absorb the retail panic. And then Friday morning arrived in Asia. And that's the piece I want to walk through as well, because with the U.S. markets completely closed on Friday, the entire Asian hardware ecosystem from Seoul to Korea simultaneously hit a localized floor and staged one of the most violent, unified V-shaped recoveries of the year. The South Korean index, the KOSPI, it exploded upward by almost 6%. We saw a massive jump, also with SK Hynix. You see, SK Hynix was up by almost 11%. It didn't just recover, it rocketed up by close to 11%. We see Samsung jumped up by over 8%. You can see on the board there. It was powered by a massive fundamental catalyst as well. Reports were breaking that frontier AI giant Anthropic is in active discussions with Samsung to manufacture custom AI hardware. I talked about it on last night's video, but this is also one of the catalysts that we saw drive Samsung on Friday in the Korean markets as well. But the real confirmation of this reversal, guys, it came out of Japan. The Nikkei 225 was up by almost 1.5% on Friday. It erased its macro losses to finish up almost 1.5%. But Japan's pure play flash memory giant Kioxia, it exploded over 9% higher, entirely depleting its previous session's bleeding that we saw. SUMCO, also a huge player in Japan. If you guys aren't aware of SUMCO, they are an elite silicon wafer supplier that provides the physical baseline for the entire global memory trade. SUMCO rocketed a staggering 11.1%. And we also saw the infrastructure powerhouse ROM. You can see right here, ROM surged over 14% on Friday as well. So this was, I want you to notice something remarkable here about all the stocks that I just showed. These companies don't occupy the same niche. We have some that make DRAM, some make NAND, some make wafers, some manufacture analog components, yet they all reverse together on Friday. That's exactly what you'd expect if Thursday's selling was macro driven rather than company specific. When you see Kioxia, which we'll go back to, when you see Kioxia up over 9% on Friday, and a foundational wafer giant like SUMCO up over 11% overall, you see that on the screen. It tells you that the institutional whales were aggressively buying the physical memory supply. While Asia was rallying on real corporate demand, the macroeconomic backdrop in the U.S. completely shifted on Friday afternoon. That's because the latest U.S. jobs report crossed the wire, showing a cooling labor market. Let me pull that up and we'll walk through it together. You can see this data is from the U.S. Bureau of Labor Statistics. Both payroll unemployment and the unemployment rate changed little in the month of June. So when we saw this cooling labor market and we saw the unemployment rate ticking up to 4.2% with little change in the month of June, instantly, the fear of an aggressive, hawkish Federal Reserve, it just evaporated. In fact, market pricing for an imminent July rate hike completely collapsed. It fell from a probability of 34% down to a probability of just 18% that we would see a rate hike in the month of July. And you layer that on top of a geopolitical relief because we're seeing crude oil down to $72 a barrel right now. That is a great sign for the market as well, because the macro boogeyman, what Wall Street used to scare retail investors on Thursday, has completely backed off. We are moving right back into a macro environment that is characterized by cheaper energy and higher supportive, dovish monetary policy framework. Lower rate expectations reduce the discount rate investors apply to future cash flows, which generally supports long duration growth assets like semiconductors overall. So what does all this mean to us on Monday when that opening bell may ring? What is going to happen in the New York markets when we open up on Monday? The lazy analysts will tell you that Micron is guaranteed for a gap up and a catch up to the massive moves that we saw across Korea and Japan. But on this channel, we don't gamble on guarantees and we don't chase green candles blindly. A one-day move does not make a trend. And Friday's massive surge happened on holiday thin volume. So we are going to use the global tape to our advantage instead. On Sunday night at 8 p.m. Eastern, the South Korean and the Japanese markets will open again for their next live trading session. This will be our signal. This will be our early warning system and the signal to see if this is a continued validation sign overall. So I'll be watching for four things. Does SK Hynix hold Friday's gains? Does Samsung continue to move higher? Does Kioxia hold its gains as well and continue to show strong conviction? And finally, does the Korean index continue to outperform? If those four signals remain intact, Wall Street will have to decide on Monday morning whether Thursday's sell-off was simply a temporary pricing dislocation. If we see strong back-to-back days in Seoul and Tokyo, meaning they hold Friday's massive structural gains and continue to show institutional accumulation, then and only then do we have a high conviction validation signal. Because if Asia holds those gains into Sunday night, it would strengthen the case that Thursday's sell-off was driven more by macro positioning than by deteriorating fundamentals in the sector. As a reminder, I want to pull up just the strength of Micron. We can go through it together. I want to show you right here of all the analysts covering Micron. And this gives me conviction. Hopefully it does to you as well. You can see in the left-hand corner, 45 analysts right now are covering this stock. 40 have a conviction of buy. 5 have a conviction of hold. And they're exactly 0 selling the stock. The 12-month average price target is sitting at $14.86. And just last week, Susquehanna reiterated its street high target of $2,000, modeling out a higher conviction in Micron's ability to sustain massive margins out into 2027. Notice what we didn't hear or didn't see over the last couple of days. We didn't see analysts cutting Micron estimates. We didn't see hyperscalers reducing CapEx. We didn't see DRAM pricing suddenly collapse. We didn't see long-term HBM demand weaken. The headlines may have changed and altered a bit on Thursday and Friday and Wednesday for this sector, but the underlying data and the fundamentals, it largely did not change at all. So guys, don't let a single kind of poor day across the board, a single day of cross-border algorithmic noise shake you out of the multi-year structural super cycle that we're seeing with this sector. Turn off the noise. Open up the global tape with me on Sunday night at 8 p.m. Let's see what signals we get out of Tokyo and Seoul and how they can validate the market for us on the opening bell on Monday. But until then, let's enjoy the 4th of July. Let's enjoy this country's 250th birthday. Let's celebrate together. I'm going to raise a toast to each and every one of you on the community. I hope you have a wonderful holiday. I hope you enjoyed this video, and I'll see you in the next one.